By understanding the technology and reasoning behind Bitcoin and its most popular alternatives, investors have the ability to really predict future price movements and have a comprehensive view of market behavior. After all, cryptocurrencies came in one way or another to stay, and it is always beneficial to know how the financial market works. But there is no doubt that Bitcoin has been in the focus of many, not to say of all, during last year. Now, at the beginning of the year, the interest of many people in the cryptocurrency has increased even more due to the surprising movements of its price in the markets. Within all of this, there are already several studies and analyses that ventures to launch predictions and exact numbers of what will be the value of one Bitcoin in dollars at the end of 2017 and 2018. But to be sure, there is of course no definite oracle that can dictate the future price of the cryptocurrencies, but studying the internal market, the external influences that may affect, and making technical analysis of the historical price graph of the cryptocurrency, it is a bit more coherent and less prosperous to be able to give some future figure for Bitcoin at the end of the year. This is precisely what various market analysts, economists, financial experts, and even investment firms have been doing in these first days of 2017. And starting from this analysis, today we can stop a bit and make ours based on what the Bitcoin ecosystem offers, the global political economic movement, and why not, some biased vision. Bitcoin aims to continue growing in the same way that many had already predicted it at the beginning of last year. The cryptocurrency has added important growth in its historical value and has closed 2016 as the highest performing asset, 120%. However, unlike in 2016, where the currency came out at the bearish rise, the outlook today is a bit different since we came to see how Bitcoin reached a new historical maximum and then fell by an extreme $300. And all this in a matter of only hours. But despite the volatility that prevails today, the predictions for 2018 are still positive in the markets, many will say. And the truth is that there is a set of conditions that, if all or at least the majority materialize, that will lead to the cryptocurrency to double or even treble its value in this year. Assumptions that are widely supported both by investors who make life within the ecosystems of cryptocurrencies and by financial experts who tend to analyze more global markets and political economic changes that alter them. But everyone seems to be an expert now only because they have heard the word Bitcoin or blockchain. But if you ever see cryptocurrencies like Bitcoin, Ethereum, Litecoin, etc., you know that the price of these tokens is quite expensive now. And Bitcoin has shot up this year and is at 7,500 each coin. And there are more than 1,000 coins in the market, and each coin has its own value. But why? Why is a coin worth what it is worth? Why do they go up? Why do they go down? Well, a currency needs two important things in order to have a long-term sustainability and increase the price. First, the users and the wallets. People who are buying and selling digital currency in exchanges while using storage method to maintain their currencies. And this makes sense since it is the classic supply and demand of the coins. In general, blockchain projects issue millions of coins that give value to your company, and you can buy them in the exchanges, the amount you want, from hundreds of thousands to 0.0000001 of a coin. 2. The business or the usability. If a company accepts a cryptocurrency as a form of payment, this gives currency usability. Now, what do I mean by usability? Well, these coins are an exchange of value, and many people are using them only as investment. But the idea is to use cryptocurrencies as an exchange of value. That is, to be able to buy tangible products or services. Then that cryptocurrency has a great advantage over currencies that are only means of investment or speculation. For example, Bitcoin between 2009 and 2012 had zero usability. Only the early adapters began to become users as such and testing the sending of Bitcoin as a money transfer from one person to person. Simple then, user base and usability. Although the economic design of the currency requires that the price increase over time, the negative expectations in the markets may well slow down this behavior. Outside of Bitcoin, the global economy seems to be quite shaky in preparing for a possible debacle, And although we think that this type of scenarios are favorable for an increase in the adoption of Bitcoin as a method of payment and or reserve of value, the truth is that we must also face the growing bad publicity that the cryptocurrency faces due to its relationship with crimes such as the ransomware and the financing of terrorist groups. While we already know that such accusations are often ignorant and malicious, a strong media campaign against Bitcoin could delay its rise in the market, at least during 2018.